Laurus Labs came out with its numbers yesterday, a subdued quarter and a QOQ decline in revenue and EBITDA as well, rather steep. There is margins which were better than the YoY comparison, but lower than maybe the estimates that the street had. So the questions to Dr. Chava is more about whether the uptick in business that they'd spoken about, which will happen in H2, seems imminent as we come closer to the end or the beginning of the as we are in the beginning of the second quarter, and more so about some longer term plans as well. Dr. Chava, good having you. Thanks for joining in. On expected lines, there was a decline, but maybe to some quarters, the decline is slightly more than what was anticipated at a point of time when debt is higher and the recovery is not happening at a pace that maybe the street expects. How would you respond to that, sir?
The quarter one is on the expected lines based on our internal targets. So the numbers, what we had shown is not a disappointment for us. That's what we expected in our initial budget last year. The transformation from being a generic API company to a respected, diversified CDMO company is taking a little longer than what we anticipated. But the weight, what we have done, the investment what we have done in that segment is coming to some fruitfulness. And as we are currently manufacturing certain projects, which we will start delivering most of the volume quantities in Q4, some in Q3. So as we mentioned in yesterday's conference call, our CDMO revenues will definitely see an uptick in the second half. If you look at our numbers, the 250 crore is the baseline for our CDMO. Those are all our commercial molecules. As we mentioned, we have about 10 molecules, 10 in the commercial supplies for CDMO. Some API, some advanced intermediate. That business is our base. We are adding a lot of projects to that base, and we started delivering quantities, and those molecules moved into the higher clinical phase, and we have orders for deliveries starting from Q3, Q4, and we expect that will be the period where we are waiting and very optimistic that will happen.
Could it be Q4 or could it be Q3 as well, Dr. Sharma? What's the probability of some of these signs being evident in quarter three? Is it a low probability or is it a very, very high probability?
If we talk about probabilities for deliveries in Q3, Q4, it will never happen. We have orders for those deliveries near us. So if you're talking about expecting an order and we start getting raw materials and delivering in Q3, Q4, it will never happen. So our confidence is because we have orders in place for those deliveries.
Okay, so let me rephrase my question. Then, therefore, the probability of a delay. I mean, Q1 there was one of the notes spoke about how there's an order deferment by the customers in FDFs, of course, which impacted Q1. You believe on the CDMO side, the probability of an order deferment is low? Would that be a fair assumption?
There is no deferment possibility here because our partners are filing, we are supplying registration quantities for the projects what we are currently making. So we don't see that.
You don't see that. Okay, which is good to know. Now, some of the things that you mentioned in the con call. So the deliveries start from H2 FY25, starts reflecting from Q3, probably builds up in Q4 as well. Does this help in shoring up the margins? Because I believe you've said that that number of 20%, circa 20%, you might probably come closer to that in quarter four. Does CDMO play a part there, or that may not be the case because it's just starting of deliveries and the margin shore up will happen through the other verticals?
If you look at there is currently our EBITDA margins around 14-15%. If that all expenses went through the balance sheet, and if we do extra revenue, since our quality of gross margin is good, around 50%. So EBITDA margins will keep increasing if we start having more revenues. But what is important, what is interesting to look at is the growth will come from CDMO. So when CDMO drives the growth, the margins are better in CDMO, and everybody knows. So our EBITDA margin should definitely go. And what we mentioned by end of this year is not that we achieve 20% margin for Q4. We want to achieve 20% margin for the entire year, EBITDA margins.
Okay. So in effect, sir, in the second half, assuming that Q2 is also similar to Q1 or maybe slightly higher, but the second half will be substantially higher than the 20% mark for you to be able to average out at 20%, circa 20% for the year.
Around 20, yeah.
Around
Sure,
20. I mean, it could be 19, it could be 19.5, what have you.
Yeah.
Okay.
You're right.
Okay, fair call. Also, as you stated in the investor deck and the con call yesterday, the crop science, sorry, if this sounds like a CDMO conversation, but because you are also talking about that, right? So as you stated in the investor deck and the con call yesterday, the crop science CDMO block will be ready, I believe, by the end of FY25. Now, how do you expect the ramp up and the delivery schedule for this particular piece, and how large would it be in the context of the overall CDMO supplies for you, considering that you are already talking about some deliveries starting in the second half of FY25 itself?
The FY25, the ramp up will happen in our animal health division.
Right.
But our crop science facility will be qualified by end of this financial year. So supplies will happen only in FY26.
Agreed. So how would the ramp up and the delivery schedules be like there, sir? And how important would this crop science piece be to the overall CDMO pie?
See, these are adjacencies, as we mentioned, leveraging our chemistry capabilities. It is interesting, but the significant growth will come from our late-stage clinical programs in the human health. I want to make it very clear. So animal health and crop sciences definitely will add, because those businesses are very consistent. Whereas the big growth will come from our human health clinical phase programs.
Okay. So while these are important, these are good, but these are not the kickers or the big kickers that is coming in from the animal health piece, right? Am I understanding it correctly, sir?
So animal health and crop sciences are good to have, but the key growth will come from our human health clinical programs, human health CDMO. Yeah.
Okay, sorry, I missed that. Okay, fair call. And that contributes in FY26 meaningfully, sir, or is that the meaningful contribution comes in, let's say, in FY27 from there?
For human health,
yes.
The animal health will have a significant growth coming from FY25 to FY26.
Right.
As we started making commercial volumes for NCE launching for animal health.
Right.
For crop science, some volumes will be there in FY26, but the peak will come from FY27.
FY27. And human?
From crop science. Whereas human health, we are delivering a good number of projects for registration NDA batches this year. And we expect we will have some commercial orders for these molecules in FY26.
Okay. Dr. Chava, one more question on CDMO. We have 4 minutes. I'm going to make this a bit of a rapid fire. But the belief is that if ARVs, which are contributing to about 45% as Q1, if they form the dominant bulk, then it's difficult to improve margins. Your confidence of improving margins also stems from the fact that as the CDMO ramp up happens and those deliveries happen, ARVs will not continue to be 45% or 50%. That number will come off a bit, and therefore margins will naturally go up. Would that be a fair assessment, sir?
I think the EBITDA margin is only related to our higher revenues.
Okay. From whichever division you say. Okay. The FDF facility, the improvement of asset utilization, because the question that comes to mind is where will we see the capacity utilization, let's say by the end of FY26 and 27, because there is 10 billion units, additional 3 billion units being planned for CMO as well with a customer, as you said in yesterday's presentation, if I'm not wrong. Can you give us some sense here?
Currently, we do 2 billion units contract manufacturing. CMO. And the partner is asking us to build capacity for 3 billion. So we are adding that capacity, and that capacity will be used in next 18 months. So from 10 billion, the capacity will go to 13 billion. And we expect the capacity will be placed very optimum level by end of next year. The current 10 billion units we are using close to 6-7 billion. We cannot use it. 10 billion is 10 billion. 10 billion what we are saying is notional capacity. But by end of this financial year, the current capacity will be optimum utilized. And by end of next financial year, maybe we'll have this additional capacity coming up, which we have projects being tech transfer right now. There are several projects planned for tech transfer before the new lines comes up. So the FDF division will do very well next financial year and thereafter.
Okay. Watch out for CDMO in the second half per se. It would be lovely to hear some commentary at the end of the next quarter, Dr. Chava. Just one final question, sir. Today is a shorter interview. We haven't gotten as much time with you, but we'll correct this in the next quarter for sure. But just one question on the debt build up, and as business picks up, I'm sure that will change. But I'm still trying to understand the math with the current debt numbers is about 3.5 times trailing 12 months EBITDA. Do you plan to, but you are a company looking at high growth and higher capex as well. How does the debt situation move from where we are right now to where it can be, let's say, in 12 to 18 months?
We don't expect the sharp decline in debt in the next 12 months. But our sharp increase in EBITDA is quite possible. So debt by EBITDA numbers will be comfortably go down closer to 2.5 by end of this financial year. That's what we are anticipating. We continue to invest in capex. So we don't expect the debt will come down sharply in these next 12 months.
Foresee a probability of raising some equity capital in order to shore up debt equity at the same time, have some funds for your capex, sir?
Currently, it is not planned. Yeah.
Got it. Got it. Okay, Dr. Chava, for today we'll leave it at that. But thank you so much for taking the time out, and I wish you all the best for the remainder of the year.
Thank you. Nice talking to you.
Likewise, likewise, sir. And viewers, thanks for tuning into this conversation with Laurus Labs.